Hello traders, good morning, good afternoon, good evening, bonjour, bonsoir mes amis, guten Morgen, guten Tag, guten Abend. For those of you who are new to us, we are the RSI Pro traders. The title of this video is How to Master RSI Indicator, Part 1. In this series of videos, I will share with traders effective trading strategy that one can use for day trading, swing trading, and investment purposes using the relative strength index indicators, the RSI indicators. Many traders use this popular indicator, but few know how to master it. We will assist the traders to master the RSI indicator. All right. In this video, we're going to concentrate on the central line of the RSI indicator, the level of 50, where I put my cursor here. This is the red line here. This is what we call the central line of the RSI. All right. When the magnitude of the recent gains are superior to the magnitude of recent losses, the RSI indicator will go above the level of 50. On the other hand, when the magnitude of recent losses are higher than the magnitude of recent gain, the RSI will go back below the central line, the level of 50. In our previous video at dayprotrader.com and also at DayProTraders YouTube channel, subscribe to it, we have explained to traders that the central line of the RSI is almost equivalent to the moving average 50. This is the moving average 50, the blue line on the chart here. I'm using here the simple moving average 50. Traders can also use the exponential moving average 50. But the simple moving at 50 can also, do the job, so to speak, all right? So how can we use the central line to make excellent trading decisions? How can we use the RSI central line to identify reliable trading setup, all right? So what do we mean by magnitude of recent gains superior to the magnitude of recent losses? It means that the financial instrument is more bullish than bearish. So priority to bullish signals when the RSI is above 50, and priority to bearish signals when the RSI is below 50. So the central line of the RSI is dividing the market into two zones. The bullish zone above the central line and the bearish zone below the central line. If you want to know more about the trading zone, go to www.stochasticmarket.com. All right? But we are not trading the RSI indicator. The common trading mistake that traders are making when they are using the RSI indicator, they spend their time trading the RSI. So they will sell the RSI will go down, but the price will go up. So trader will lose. And then trader will buy the RSI, and the RSI will go up, but the price will go down. So to avoid those mistakes, I want to show you here why you need to pay attention to avoid those crazy mistakes. Because what traders do care about is about things that work. They want to buy and make profit. They want to sell and make profit. So they want to know when the financial instrument is about to go up and when the financial instrument is about to go down. The first thing that we want to understand, there are two types of financial instruments, all right? There are some financial instruments that are dynamically bullish, all right? One example, Google stock, Johnson Johnson, all right? Apple stocks, all right? This stock, this is what we call dynamic bullish stock. Dynamic bullish stock usually will retrace up to the 60% Fibonacci retracement level, 61.8% Fibonacci retracement level. Sometimes they find it even difficult to cross the psychological price level at 50% Fibonacci levels. These stocks hate to go below the 50% Fibonacci retracement level. These are dynamic bullish stocks. When they are correcting, when the price is correcting, okay, it will find it very difficult to go below the level of 61.8% Fibonacci retracement level. On the other hand, there are some stocks, they are what we call dynamic bearish stock. The fundamentals are poor, fundamentals are degrading, and they will stay below the 61.8% Fibonacci retracement level. Or you will see that they will retrace up to 100%, they will go up all the way to 61.8% level, and then people will sell them again, they will go down. So another thing we need to understand about the central line, we also allow us to determine, okay, dynamic bullish and dynamic bearish stock. But we can use this strategy on different time frames. Though a financial instrument may be dynamically bullish, it may become for a short period of time bearish. So with the RSI, for instance, on a daily chart, all right, we may see a contra trend when the financial, though it's dynamically bullish, may become for bearish for a while. So using the central line, we allow us to see that, okay, though this financial instrument is dynamically bullish for a while, okay, it is bearish. On the other hand, if a financial instrument is dynamically bearish, with the RSI, we may see that maybe on the hourly chart, 2-hour chart, 4-hour chart, is now above, okay, the central line, okay? So with the central line, we can do a lot of things. So when we want to, especially if you are an investor, you want to buy using the RSI, you will use the central line. So you will start buying when it goes above the 50% level, but you do not buy anyhow, all right? You will time the market, and you will also buy at the best price, okay? Best price, okay? On the other hand, if you want to sell as an investor, you can also use the central line. You want to sell when the RSI goes below the central line, or the price is below the moving average 50, and you want to sell high at the best place around key resistance levels, okay? So you are a day trader, you are a swing trader, you are wondering, George, tell me more, all right? Let's go back. I'm using the monthly chart, all right, because the monthly chart reflects exactly, okay, what we want to see. We see the bigger picture, okay, on the monthly chart when we are applying this strategy. So RSI goes above 50. What do we need to pay attention to? So here you can see, if you see here, the RSI went above 50, okay? So at this point in time, it's telling us that, okay, George, the magnitude of recent gains are higher than the magnitude of recent losses. So there are more people buying this stock than more people selling it. The market sentiment is bullish. Well, I would say yes. Thank you very much for the information. As a technical trader, all right, what do you need to pay attention to? What will you wait for? You will wait for the first higher low after the RSI crosses above the central line. So here it crosses above the central line, which is the red line here. We want to look at the price, so we acknowledge the RSI, and then we put it aside. So myself, what I'll do, I just put it down. Okay, now I want to concentrate on the price itself, the number one indicator. Thank you for information given to me, RSI. Okay, what is happening? What is the price itself is telling us? There was a down move here before, and the price is out of the declining channel, okay? We don't want to violate the market pattern. For the purpose of this video, I don't want to talk about the market pattern too long. What do we wait for? We wait for the first higher low, right here. All right? Here, this is a bullish setup. The RSI crosses above the central line. The price also crosses above the moving average 50. We are very patient traders, conservative traders. We want to buy, but we want to buy at the best place at a low risk entry point. If you look carefully, looks like, okay, an inverted head and shoulder pattern here. All right, this is the head, the left-hand side shoulder, And right here, this is a psychological price level, and the price retesting it here. This is a beautiful place to buy. As a day trader or swing trader, once this trend line here, the common sense trend line of the pullback, trade that are trading stock, we check the volume of this pullback because we want to see a low trading volume here. Okay, bearish momentum should not be strong when it's pulling back like this. If you see a surge in trading volume, this move down, you need to be careful. So price is displaying a higher low after the RSI crosses above the central line. It is a bullish signal, a bullish trade setup. We are on a monthly chart. We will not enter the trade on a monthly chart. All right. We'll use what we call a trading drill. The setup, the signal, and the low risk entry point. This is about multiple time frame trading method. We see the setup on a monthly chart. As a TSTWS as usual a trader, I will go to the signal time frame, wait for signal on the edge, and I will go use the TSTW key 02 to enter the trend. If the signal has failed, as you can see the price going up, TSTW24 trader will see that it's going up. Signal will fail here, telling that to sell. Okay, but it's still above the 50s, bullish. It's a contra trend, we can wait. We see another bullish signal, we re-enter the trade, so we close the trade here. And then we re-enter again, we go up, and then it gives us again another signal. So the point I want you to remember, RSI is above 50. What is the meaning of it? We know it now. Next, we want to see higher lows. We want to buy on the edge of a trending, a rising trend line on the edge. So here, we bought it here. We will again buy again right here. We will buy again right here. You see how they push it down to touch it here on the monthly chart and close back up. We will not enter the trade on the monthly chart. We will use a multiple time frame trading method. All right, step by step. We will also use the niche trade because we know how to detect, okay, a trading setup. We can see that the price is going faster here. We have a new trend line here. Game on. We want to buy at the best place where the risk is low. One can also use, okay, the pitchfork tool because once we see a pullback, we can use a pitchfork tool. Here you see here. So let's show you, okay. If you want to know more about pitchfork tool trading, go to www. Okay. So there's one here, okay. Price pullback here. See here on the edge, okay, on the edge, on the edge. All right. If you want to draw it like this, you can draw it like this, and you can select a low risk entry point using the pitchfork tool. Price goes up, price pull back. We can use the pitchfork tool to determine, okay, the hotspot trading zone. It makes sense. It is also powerful. So in order to trade the RSI like professional trader, so I want to show you again the RSI. We will acknowledge the warning given by the RSI. You can see that though the RSI is overbought here, the price was going up. So we don't want to sell it because we know that the magnitude of recent gains are higher than the magnitude of recent losses. We want to give priority to buy signal, and the price also above the moving average 50. You have to understand that the price might display a higher high before giving us okay, the higher low. If the price gives us a higher low, but has failed to display a higher high before giving us the higher low, we will be very cautious, all right? We want to draw the channels, and we don't want to violate the market pattern. Okay, the market pattern. You see the trend line, the blue trend line, the blue channel, okay? We can sell when the RSI is overbought, but only if a trend line is broken and we test it here, break below. Okay, we buy, hit it here. This trend line here is kaput. Yes, this is a bearish setup. I don't want to talk about that now because this is the first video. We want to concentrate on the central line. So RSI crosses above the level of 50. It's equivalent to the price going above the moving average 50. Sometimes you may see that there is a discrepancy between the RSI and the price itself. But we will always pay attention to the price. If the RSI goes above 50, but the price still below the moving average 50, we will wait until the price goes above the 50. The price is the #1 indicator. All right? It makes sense? It makes sense? Let me remove all my drawing because we want to stay focused and master the central line of the RSI indicator. So when the RSI gives us a warning, all right, we will implement the trading drill, but we will also use what we call the trading triangle. So once I see a technical bullish setup, it's not sufficient for me to go and buy straight away. I will go to Google Finance, check the fundamental, perform what we call a Google RSI test, okay, use the trading triangle, which means the market environment, the market sentiment, okay, the sector, okay, the fundamentals, the market leaders. This is about, okay, the trading triangle, especially if you are swing trader, position trader, or an investor, you must use, okay, the trading triangle. All right, it makes sense. It makes sense. It is also powerful. The strategy that I've discussed with you now, we're on a monthly chart. We can apply it on a 2-hour chart. I prefer that trader use 2-hour chart instead of the hourly chart. Use 2 days chart instead of the daily chart. I'm not saying that it's not possible to trade this strategy on the hourly chart or daily chart, but because of the distortion that we see very often, especially on the daily chart, it's better to use the 2 days chart, okay? But we can use also the daily chart, all right? All right. If you are using the trading drill on any time frame, you will be able to avoid trading mistakes. The opposite is also true. Let me show you. When the RSI D below the central line, all right, let's go to that. Here it is. You can see here the RSI crosses below the central line. What is it telling us? It's telling us that the magnitude of recent losses are superior to the magnitude of recent gain. The financial instrument is under pressure. Okay, it is becoming more bearish than bullish. We can go to Google Finance, check the fundamental. We are on a monthly chart, especially if you are doing this on a monthly chart. Okay, except if you are for day trading to take quick profit. All right, you need to check Google Finance. Okay, to check the fundamental if you want to sell and hold. All right. So here the RSI D below the level of 50. It's telling us that the price should also be below the moving average 50. Here you see that the RSI went below 50 before the price, and finally the price did below the 50. What are we looking for as a technical trader? We are looking for a lower high. And the common central line is kaput. This is a bearish setup. All right? All right? It's a bearish setup. Now, when the price is in a declining channel, the price is looking for a better support level. So when you see a bearish setup, ask yourself, are we in a support zone? Are we in a resistance zone? So you can manage the risk. All right, there's a support here. So there's also a key level here, which is making it very tricky here. Myself, in this scenario, I will be very careful. If I use the TSTWS08 as sell, I'll keep my eyes on the trend because there is a consolidation. You see this section here, which is very close to the setup area. On the edge here, I'll take it gently, 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 or instead I will day trade using the TSTW24. So when the RSI D below the level of 50, we will look for the first lower high, okay, and the common central is broken. This is a bearish setup. Now we will use a multiple time frame trading method, which we call also a top-down trading method, and use the trading drill to enter the trade and to manage the trade. If the signal has failed, just come out. All right, the signal. So you see the setup, okay? You are happy with the setup. So when we see a setup like this, what's the next step? We on the monthly chart, we see a setup like this. We want to validate the setup, okay? So we will go, for instance, because we want to go to a higher time frame than the setup time frame. So in this case, I can go to the quarterly chart and say to myself, where are we? See a bigger picture again, and then I will see, okay, is it a best place? Is there resistance? What's going on? Okay, you can see here on the quarterly chart, price went above this line and retested with this red and went up. So this is a key level. That's where we are. We are on the edge of that level. Are you with me? If I color it now into pink, okay? It makes sense? This level, breakable, retest, and went up. So this is a key level. So that's what is happening. So now I'm happy with where the setup is taking place. Okay, now I will go and use, okay, the TSTW S08 or a valid trending system. This is about the central line of the RSI, the equivalent or the substitute for the central line for all RSI. It doesn't matter whether you are using RSI 20, RSI 50, it is all still valid. The relationship, the correlation between the moving at 50 and the RSI central line is still valid almost all the time. Up to 80% of the time, you see that this correlation will remain in place. Let's go now to the 2-day chart, a 2-hour chart. You will see exactly the same thing again. We are now on the 2 hours chart, and I'm going to put here my 50% level, roughly, because I don't want to waste time. You see here, that's color, leave it like this. You see this is the line here draw, and we want to see, you can see, the RSI crosses above the central line, okay, and then was wiggling, all right, oscillating above it gently. And finally, they see the price did exactly the same thing here, right here. Right here, you can see that the price did not go far. Why? If you are trading the RSI alone, you are ignoring the price, you are likely to make a wrong mistake. So you see a setup. What do we do? Draw the support, the resistance level. You want to sell at a resistance zone. You want to buy support level. So here, though the RSI see went above, okay, the central line, okay, and the price finally crosses above, we are very close to a resistance level. So in fact, this is what I say to trade. Look on your left-hand side. Look on your left-hand side, okay? All right? Look on your left-hand side, okay? Right here. So the prior move was bearish. The dominance fault is bearish. The price consolidation or consolidating. We will check the financials. All right, check the financials at Google Finance, at Yahoo Finance, and here, if the financial has, if they are not strong, okay, we will not buy. Though the RSI crosses above the zero line, we will not buy. We will instead look for opportunity to sell because the financial are revealing to us that the fundamentals are weak, the market sentiment is bearish, though the RSI crosses above the zero line, it may be a short-term move on the 2 hour chart. You see here, on the 2 hour chart. So if you stop on the 2 hour chart like this and you buy, you need to be careful. You see, it just went up and come back, went up, didn't go too far, and then quickly crashed below it. Went above. Now, the market pattern in this session is what? Is a consolidation. We don't want to violate the market pattern when we are applying this strategy. So the mistake that traders are making when they're using the RSI central line, they forget about the price completely and they just buy. So remember, anytime you see this, ask yourself, which market pattern do we have now? What has happened before? What has happened before? Price was going down. So some people were selling. What is happening now? The price consolidating. Are the seller relaxing or resting for a while and continue again? In this case, I will be very worried, okay, if this is not. So on the 2 hour chart, we see like this cross above the zero line. Now we will switch to a higher time frame. In this case, I may use daily chart as my higher time frame. Where are we? We were here to see what is happening on a daily chart, and I will draw my key levels on a daily chart to see the bigger picture. It's also a resistance zone, and this is where the price is oscillating on a 2 hour chart, so I may not fight the bigger time frame. This is about the top-down trading method with the central line. It makes sense? It is also powerful. One should understand that there is a correlation between the central line and the moving at level 50. It does not matter which setting we are using for the RSI. It's still valid, okay? When one see a crossover above 50, one must now concentrate on the price and pay attention to the market pattern. We will always use what we call a multiple time frame trading method. When we see a setup, we will not enter the trade on the setup time frame. We'll go to a higher time frame, validate the setup, and then use a top-down trading method. Attention to the price structure. The RSI will give us a warning, but the price must confirm the warning. All right? It makes sense? It makes sense? I want you to understand this, and next time to apply it like a professional trader. When the RSI crosses above the zero line, we want to look for the first higher low on the edge. And when the RSI at the support zone, if it's a resistance zone, after analyzing what has happened before and the current price structure. Very, very important, okay? When the RSI dip below 50, we were looking for the first lower high, and we want to pay attention to, okay, the price structure. This is about how to master the RSI indicator, part 1. I hope you have learned something for this video also, and we put it into use, okay, to make excellent trading decision. All right. In the next video, I will be talking about how we can scan for stocks. Okay. In part 2, I will talk about okay, scanning. Okay, using the central line of the RSI, and I will talk to you how we can scan for stock. Because you are trading many stock, we can use TC2000 to scan for stock. And how do we scan for stock? Looking for this setup so we can prepare ourselves for day trading, for swing trading, and for investment purposes. Which time frame we should use most? For investment purposes, use the monthly chart. Okay? For swing trading, you can use the monthly chart and the weekly chart. For day trading purposes, you can even go from the yearly chart directly to your signal time frame. For TSTW24 trader, you can go from the daily chart to the first best time frame, weekly chart to the first best time frame. Look first for the best setup, reliable setup before pulling the trigger. We wish you the very best in your trading, and until the next time, enjoy yourself and be very happy. We are the TS RSI Pro traders. Speak to you soon.